Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast for the coming week, and we're starting from dollar index. This is the weekly time frame. So if you guys have been following us for some times now, you would know we called out the bullish reaction here when we saw how price returned into this weekly bullish fair value gap, and we had this bullish rejection to the upside. So we started pointing out the expectation to see this bullish move into this weekly bearish order block, and then we could see bearish reaction back into the fair value gap. And from the reaction at the fair value gap, we pointed out this bullish expectation to the upside because we saw relatively equal highs resting here, which is buy side liquidity pool. So what we can see is this is the monthly bearish fair value gap zone, and we have this rejection block here. So what we can see, we know that the dollar index is bearish, but then now we are seeing the possibility of bullish movement to the upside. And clearly it means that if we're going to have sustainable bullish movements, then we may see price trade into this rejection block, and then in extension, the monthly bearish fair value gap resting here. So what we can see is that price reacted at this weekly bullish fair value gap, and that is what started giving us this bullish reaction to the upside. So now price traded into the bearish weekly order block and return into the weekly bullish fair value gap we can see here, and price mitigated the volume of this rejection block, and then we started seeing the bullish movements, which I told us I think 2 weeks ago to expect to see for the bullishness to take out this relatively equal high points. That particular weekly forex forecast is on the YouTube channel. You can go watch that for educational purpose. And now what we can see is last week gave us bearish movements to the downside. But what we can see is that price is respecting the mean threshold of this engulfing candle, which may give us the possibility of continuous bullishness to the upside in the dollar index. But then we must pay attention to the fact that the structural narrative is bearish. We can see clear bearish impulsive movement to the downside. But now we have price reacting at a weekly bullish sponsorship zone. So therefore we're expecting the possibility that we may see now higher prices again further to the upside, except then we see price decides now to trade lower to the downside. But then I'll be expecting bullish possibility in the dollar index, even though what we can see structurally we are bearish. So let's check the daily time frame so that we can look at things from a smaller narrative. So what we can see from the daily time frame is that we have the weekly zone in which price reacted from and gave this bullish movement. Price traded into this bearish sponsorship zone and gave the bearish movement to the downside. And now we can see bullish movement that took out the pool of buy side liquidity resting here, which we also pointed out in the weekly time frame. So what we can see from the daily time frame is the fact that we have this fair value gap bearish, which is now an inversion fair value gap, because what we can see is that price traded through that, volume closed above that, and we had further bullish movement that took out this high, in extension took out this high point, which we have pool of buy side liquidity resting there. And what you can see now, price traded back to it. It acted as an inversion fair value gap, providing support for price. So if we are going to see a bullish expectation from the daily time frame, what we're going to see is the likelihood of bullish continuation to the upside, where we would want to see if price gives us a change in state of delivery from this candle. Basically, if you've been following me, then you would know what I mean by change in state of delivery, or even the mentorship community, then you understand the change in state of delivery. Then we want to see how price may give us that change in state of delivery, and in extension may also want to aim for this buy side liquidity. So if we have the change in state of delivery, we could see this possibility that price now would further push to the upside, taking out this buy side liquidity. So first you want to be targeting to see price trade into this bearish zone, and then in extension now we could look further to continuous bullishness to the upside. So clearly it means this is what I'll be looking forward to in the dollar index. But then what we can see is the fact that here is the price is reacting at an inversion fair value gap. So we could see that possibility that if we have lower prices where price trades to the downside, so want to see price trades to the downside, and then we may see sharp resistance here, and then price would fall to this bullish order block resting here in the daily time frame. So you have to wait to see what happens here in the lower time frame, because from this daily bullish order block, we could see price give us bullish movement of price to the upside. We could see price now begin to print bullishness to the upside. So for us to really be strongly bearish in the dollar index, then I would really want to wait to see how this gets violated, and then we'll have the possibility of going bearish to the downside. So you can see I'm showing you the possibilities that may happen in the market. You have to understand that trading is also reactional. You have to wait to see. You have to have probabilities. If this doesn't happen, what then is the possibility? What next is probable to happen? Then you work with that. So for the bullishness, when we see the narrative, when market open in lower time frame, we begin to see narrative that it's want to continue bullish, respecting this inversion fair value gap, which is in confluence to a daily bullish fair value gap resting here. And then in a lower time frame, you're seeing that price wants to continue bullish. Then you trade bullish, targeting this buy side liquidity. In extension, you want to see price trade into this bearish sponsorship zone, and the violation of this now will mean further bullish continuation to the upside. But then if price then decide to want to go bearish, then you must understand that the first zone you have to trade bearish to is trading bearish to this bullish order block here in the daily time frame, because this is where we have the swing low that sponsored bullishness that took out this high point, and in extension took out the structural high point where we have pool of buy side liquidity. This is what you have to work with. So if you're bearish, then you want to trade first to the bullish order block you're seeing here, because from the bullish order block we may now see price continues bullish, gives us a reversal to want to continue bullish to the upside, because now we are seeing bullish narrative because of how price now reacted from the weekly bullish fair value gap zone we identify from the weekly time frame. So now if you're now strongly bearish, then when you execute a bearish movement from the narrative that you possibly see prices falling to the downside, and then price may return to retest this and face resistance, so it means that your first target is the bullish order block. You can decide to trade your stop loss in lower time frame if you believe price is going to violate the bullish order block here in the daily time frame. So, and then if price violates that, then we know that price is going to aim for this sell side liquidity, and in extension we may see bearishness. So I'm giving you the perspective, so you have to work with this perspective. You have to interpret that to what suits your expectation in the markets. So from the 4-hour time frame, what you can clearly see from the 4-hour time frame is this. So we can see we are having price now giving us this bullish narrative to the upside. You can see clearly from the 4-hour, there's a structural point that price broke through. And you know, the reaction from the weekly bullish fair value gap zone. So you can see when price traded to the upside, return into this key level, this open close price and bullish movements that broke through this high point. So you know, this is the bearish fair value gap zone from the daily time frame, acting as an inversion fair value gap zone. So clearly it means from the 4-hour time frame, what we can see is that price is respecting that inversion fair value gap zone. So it means if we are bullish, which I've shown you from the daily time frame, you want to see how price now may continue higher. If price takes this out, then you may want to look forward to a pullback. You target buy side resting here, and you have this fair value gap resting here. And so you want to trade higher to the upside into this fair value gap. You also have the bearish sponsorship zone here. So the violation of this bearish sponsorship zone would mean that you want to have continuous price movement to the upside. So first, this is the target. Once you see price opens and you have bullish movements, then you may expect to see that return to the downside, because it means that price has taken out this high points. So you want to see a return, and then you have bullish movements to take out buy side liquidity. In extension, you have what? A bearish fair value gap resting here. So you want to trade to that. So first you want to trade and then target the possibility that price would come into this breakout block zone, because price may now come here and react to the downside. So this can be a target price before we can see the possibility that price may continue to this bearish order block, and the violation of this will mean continuous bullishness. Or what you may now see is the fact that price may decide to trade lower to the downside. If price trade lower to the downside here, it means that price violates the low of this candle. You may expect to see a pullback to retest this and face resistance. So you want to trade bearish now to the downside. Now you can see from the 4-hour, this is the daily zone, price mitigated that, and now this is the 4-hour, freshly 4-hour zone that price did not mitigate. This sponsored the movement that took out this opposing supply zone. So you may trade bearish to this sponsorship block. So you have to wait to see what happens at this level in confluence to the daily. So if price violates that, then you know that now we are going to see a continuous bearishness. So it means when we see this, then we may see price now continue bearish to the downside. So this is the first target. If you're bearish, you want to trade to this level first, because from this level, price may decide to give us a reason to go bullish, because this is the daily order block zone, the daily bullish order block zone, guys. So this is what I have to show us, guys, in the dollar index. Let's check out the Euro USD pair, guys. This is Euro USD, and this is the weekly time frame. So what we can see from Euro USD, you know, we've been predicting all these movements, making forecasts, expecting all these movements, and we can see how that has delivered to the upside. So what we can clearly see is this is a monthly bullish fair value gap. Just the way you can see in the dollar index, you have a monthly bearish fair value gap. So what we can see in Euro USD is the fact that price traded into this weekly supply zone, this weekly bearish fair value gap zone. And you know, we said we want to start seeing the bearish expectation to the downside. So clearly you can see what price has done is to return into this open close price, which is in confluence with this high points, the volume of the candles. You can see how price deep lower retested that rejection to the upside. But what we can see is how the dollar index currently sprinting more of a bullish structure, but you must understand that from the higher time frame, the overall direction of bias is that we are seeing bearish narrative. But then we must also pay attention to the fact that now what we are seeing is bullish reaction, and then bullish structures are being created. So here in the Euro USD, what we can see is how price give us the bearish movement to the downside, now into this level, and now rejection to the upside. So price is reacting at this supply zone. So this is a monthly bearish fair value gap resting here. So it means if we're going to see continuous bullishness, then it means that this is the draw on liquidity to the upside. And now if we are seeing that price may give us bearishness to the downside, so it means we want to see price trade into this rejection block, and in extension the monthly bullish fair value gap resting here. So since I'm pointing out that I'm expecting the possibility of bullishness in the dollar index, but then I also showed us what we may see if the price decides to give us bearish delivery, how then we can look at narrative and leverage on that to jump into a bearish continuation. So what we can now see is in the Euro USD is this is a rejection that price gave us to the upside after price mitigated this level here. So what we can see is the reaction now from the supply zone. So clearly it's just like we have to now look at what we may anticipate looking at the relation with the dollar index. So for the Euro USD, we know that it is bullish. The Euro USD direction, the overall directional bias is that we are having a bullish movement. But now in the most recent price action, we saw bearish narrative, and now price still respecting that supply zone, because what you can see is that price has given us a bearish engulfing candle here, which means we could see the possibility that price may respect this and continue bearish to the downside. So this is the narrative from the weekly time frame. So we just have to be open-minded, because now we can see price give us this bullish movement back into the supply zone and a bearish to the downside. Volume closed below the low of this bullish candle. So let's check that from the daily time frame. So here in the daily time frame, what we can now see, you can see clearly is that we are having bullish structure to the upside. This is it. We're having bullish structure. This is the last low point that gives us the break of structure here. So it means for us to be fully bearish, then price has to now trade more lower to break this low. That is when we are now fully bearish on a long-term narrative. But now what we can see is we had this pullback to the downside when price mitigated the supply zone, and then return and then fell with an impulsive movement, giving us a failure swing here. Hence why we may see the possibility that we could have what bearishness to the downside, since we can see that it means that price is respecting this supply zone from the weekly time frame. But then you must understand that the overall directional bias is bullish. So what we can see is we have this bullish fair value gap from the daily time frame, in which price violated with volume closing strongly to the downside, taking out this low point. Because this low failed to take out this high, we had a failure swing here, bearishness to the downside to the level we saw from the weekly time frame, which is here in this daily time frame here, and price gave this bullish movement to the upside. So for us to want to see the bullish continuation, then it means that we want to see how price drops to the downside here. How price reacts here will determine our bullish expectation. If price gives us from lower time frame a bullish reason from this daily bullish fair value gap, then we want to trade bullish, seeing how price will take out this high points here. In extension, we trade into this unmitigated candle wick before we determine if this is going to give us a strong bullish continuation to the upside, because price may trade here to this and then we could see price gives us bearishness to the downside. But then if you're strongly seeing that it is bullish, then you may see price comes here and then whatever you want to consider maybe a pullback to continue bullish to the upside. So this could be what you are expecting, or this is what we would want to see then in the market. If price possibly respects the reaction it is facing at this inversion fair value gap, which is in confluence with a bearish fair value gap here, and then we have a drop into the zone and we see price respecting this in a lower time frame, giving you a model to want to go bullish, then you want to go bullish and then you want to trade into this unmitigated candle wick, because from this unmitigated candle wick we may see price begin to give us a reason to want to go bearish to the downside. And from the narrative we're seeing here, because price is respecting the inversion fair value gap, so it means that you could see the possibility that now we have that continuous bearishness. Price will violate this bullish fair value gap. We have that as an inversion, aim for this sell side liquidity. In extension, price trade more lower into this fair value gap zone, and then that would now help us to determine the reaction we would see when price is respecting this fair value gap zone, would help us determine if we're going to see the continuous bearish reason to the downside. So this is what I have to show us, guys, in the Euro USD. So that is why I said the first time, trading at times is reactional. You have to look at narrative and react to what you're seeing the market telling you. You don't really need to be so rigid with an established bias or a direction. You have to be flexible. Look at what the market is saying. So from the 4-hour time frame, what you can see from the 4-hour time frame is the fact that you see this is the demand zone that gave us this bullish impulse that took out this trend line liquidity, and now price fell impulsively to the downside. This is the daily bullish fair value gap acting as an inversion. So basically now this is a violated bullish order block. So you can see how price returned, it reclaimed price, and now we had a rejection to the downside. So clearly what you can see is that price is still respecting this daily inversion fair value gap. Volume is trading below that, hence why now we could look to the possibility that we can see a bearish continuation if price violates this bullish fair value gap zone. In confluence to these, we could see this act as an inversion and then we have further bearishness to the downside. But then if you're bullish, this is your bullish possibility. Price may trade here and then give you your bullish reason to want to go bullish to the upside. And again, the next bullishness could be price continues then to the upside, and then you have first target to see price trade into this bearish zone. That will help you determine if this is going to be violated. Then it will help you determine if you're going to be more bullish to the upside, because price may return here and then we have a bearish narrative to the downside, looking at how this sponsored the impulsive bearishness. So, and in comparison to the dollar index, so that is why I'm pointing that possibility. So you want to target this first. So whatever happens here will help you determine if price is going to continue strongly bullish or you have a bearish reaction. So this is just what I have to show us, guys, in Euro USD. So let's check out the GBPUSD pair, guys. In GBPUSD, what we can see is the fact that, previous weeks we pointed out that price was reacting at a monthly supply zone, took out buy side liquidity, and then we expected this bearishness to the downside. And when we saw how price continued bearish, taking out this low points, we saw price give us a change in state of delivery. I think in the free Telegram community, I shared how I was expecting a pullback and then a bearish continuation. Mind you, if you want to join the free Telegram community, don't expect signals. I do not provide signals. I give full detailed charts narrative based on what I am seeing, and then leave you to make decision for yourself, either to leverage that information to trade with your trading confidences and models, or you decide to do away with whatsoever I shared here. So it is not a group where you really receive signals, but then you can join the interactive group where others share their work signals, or let me call that their chart setups, where they show you entry price, the stop loss price level, and where you're targeting for your take profits. So my goal is to make people understand how to interpret the market and leverage that information to trade for themselves. So what we can see after the change in state of delivery, we had a bearish fair value gap in which price pulled back into, and then the continuous bearishness. Now we can see price created equal lows here, sell side liquidity. This is a monthly bullish fair value gap zone. So anyway, what we can see is that price has given us a bullish movement to the upside. There is really no strong zone for this bullish reason, except that we can see that price is respecting the bullish fair value gap the second time. That is all we can point out to. So if the dollar index gives us the bullish delivery, then we'd want to see that the GBPUSD would give us a depreciation in price, because now we have what? Sell side liquidity resting here. So we have to wait to see what happens when the market opens, and then we'll now also check the lower time frame narrative. Let's check the daily time frame. So here in the daily time frame, what we can clearly see is the fact that now price gave us our bearish movement to the downside. We called out these bearish movements, and we can see how that has been fulfilled. And what we can see is this bullishness. I think in the free Telegram community, I also pointed out the fact that we saw this rejection, and then I told us to expect a short-term bullish movement. And what we can see, last week sustained more of the bullish movement. I was targeting to see price trade into this fair value gap zone. That particular chart narrative is in the free Telegram community, and we can see how price traded bullish to the upside. So what we have is this supply zone resting here. So it means if we are going to see bearishness to the downside due to the equal lows here, and the fact that the drawn liquidity to the downside from the monthly is this fair value gap zone. Let's check the monthly time frame so that you can see something here. So from the monthly time frame, we can see how price broke through this high point now into this monthly zone, the supply zone, and you can see the fall of price. So we have what's a monthly bullish fair value gap resting here, and you can see we have a bearish engulfing candle. So price may be moving to the upside to mitigate this engulfing candle, and then we have the possibility of bearish movement to the downside. But then we have to be open-minded. Price may decide to go bullish. So from the weekly time frame, this is a structure that was broken. Where is the zone that sponsored the movement that's validated the break of this? Anyway, we can see that started from the swing low point. So we had this pullback, and this is where we start having the bullish impulse. And within this zone is where we have the monthly bullish fair value gap zone. So reason why I'm saying we may see price gives us bearishness, but you have to be open-minded. If we see that volume is continuing bullish, then we have to sustain bullishness. So from the daily time frame now, what we can see is the fact that price have traded into this fair value gap I was targeting for last week, and further now price is pushing to the upside into this fair value gap. So it means we have to look at the possibility that happens within this fair value gap. If price trades into this and then price gives us a sell reason, then we want to sell GBPUSD to the downside, meaning price respecting this bearish order block also. Then we want to sell GBPUSD to the downside. But then if price now doesn't give us that sell model, so it means we have the possibility that price may violate this zone. The violation of this zone then would give us the reason to want to expect bullishness to the upside. So if price decides to continue bullish, then we want to trade bullish first to this sponsorship block. The violation of this now will give us the reason to sustain bullishness. But if price comes to this zone and decide to give us a sell model, basically we have sustainable bullishness to the upside here, and price comes here and gives us a bearish model, then we sell. So you must identify the bearish model from the lower time frame, and you don't just sell immediately targeting to see price just straight to the zone. So you have to be targeting the fair value gaps as the draw on liquidity, and then in extension you have the swing low points. So clearly this is what I have to be looking out for in GBPUSD. Or then we could see price may open deep into this fair value gap and give a bullish reason. So first would be to trade it here, and then look at what happens here. Whatever happens here would help us determine if we want to have a bearish movement or a bullish movement. But if the dollar index gives us a clean, clear bullish expectation, then you know we want to be looking at bearish reason in GBPUSD. Let's check the 4-hour time frame. So here in the 4-hour time frame, what we can see is this is the low that gave us a bullish movement that broke structure here. Another pullback here, went to the outside, broke this high. Now we can see price drop to the downside, taking out this low point, a pullback, and then price fell again to the downside. We have relatively equal low points resting here. Price have not broken the swing low that gave us this break of structure. But then you can see that price is giving you a bearish narrative to the downside here, bearish structure. If you're a trend line trader, you know, you have your trend line here. So you can see that we have a trend line here. So what we need to look at for is to see what happens when the market opens. So from the 4-hour time frame, this is the bullish order block. I was expecting a buy reaction, I think last 3 weeks, to see a temporal bullish reaction, and then we may have a bearishness. So we may see price trade into this. So I mean, we may see price gives us bullish reason more into that, and price, and you can see it's in confluence with a bearish fair value gap. So we have to now look at what happens here. Price may give us a reason to want to go bearish to the downside. We have targets here, we have this target, in extension this target, and in extension the low points. That is if we're going to have sustainable bearishness to the downside. So this is for the bearish expectation. So if we are then bullish, we could see how price may give us a reason to trade above this fair value gap. With volume closing above that, we may see a pullback, price trade higher. Now you want to see price trade into the zone first. You don't want to be extremely bullish first. So you want to see how price trade here, and whatever happens when price reaches the zone, you know, which is a supply zone from the daily time frame, a clear supply zone. Whatever happens there will help you determine if you're going to sustain continuous bullishness to the upside. So this is just what I have to show us, guys, in the GBP USD pair. So let's check out the gold pair, guys. This is gold from the weekly time frame. Gold has been a messy pair for a lot of traders, except to utilize the information in the lower time frame. So we can see that from the higher time frame, you can see how choppy this is. When price reacted at this bullish zone, price started giving bullishness to the upside, but failing to take out the external range. Price just gave a really poor price action here. So what we can now see, you know, last 2 weeks, I think, when we saw how price rejected from this, I told us to expect bearishness for price to take out this low, and from the daily time frame, we pointed out a key level that will give us this bullishness, and now we can see that bullish reaction. So this took out this low, and we can see volume closed above the high. So we may see price target this buy side liquidity for the coming week, but then you have to be open-minded looking at how gold has just been trading or delivering. So what we can now see from the daily time frame is how 2 weeks ago I told us to see, want to see price take out this low, and want to trade to this key level, because from this key level we could see a bullish reason, and price clearly gave that bullish reason. You can look at the forecast, it's in the YouTube channel there to validate what I'm saying. So what we can now see is we had this bearish movement, price gave bullish movement and broke through that high points. Let's just mark this where we have this change in state of delivery here. Let's identify that. So what we can now see is how price, this is a bullish zone here that gave us this bullish impulse, because in the lower time frame you're going to see that price took out pool of what trend line liquidity here when we go to the 4-hour time frame. So this sponsored that movement. So when price violated that, you can see now a bullish reason. This reclaimed price. This is what we call reclaim block. It reclaimed price and now gave what bullish reason to the upside, and you can see it's in confluence with a bearish fair value gap, which now acted as an inversion fair value gap, and we had bullish movement of price to the upside. So what we can see here, we have this engulfing candle. So it means if price is going to continue bullish, we don't want to see price violate this. So it means price may trade lower, and then in lower time frame, you find reason to want to go bullish to the upside. So it means that if price violates this, then we'll start targeting to see price trade first to this level here, where we had, this is the buy movement before the sell movement that returned to the key level. So you see, this is a sell candle before this bullish reversal to the upside. So we have to trade to this level first and see what happens here. That would help us determine if we may see a reversal to continue bullish or price may continue to the downside. So we have to trade here first to see what happens, and in lower time frame we look at what might be the model that would be formed when price returns to this, because now you can see you have a bullish fair value gap there. So you're trading into the bullish fair value gap. So if price is going to continue bullish, it should respect this engulfing candle and continue bullish. Violation of that would mean we want to trade lower to the bullish fair value gap we're seeing here. So this is the narrative from the daily time frame. Let's check the 4-hour time frame. So here in the 4-hour time frame, what we can see from the 4-hour is the fact that, okay, you can also see the 4-hour in confluence with the daily. We have a bearish fair value gap here, which serves as an inversion fair value gap. Don't forget, this is the reclaimed block level marked from the daily time frame. So you can see how price returned, retested that, continued bullish. Now you can see this is where we have a sell movement before this bullish movement to the upside. So you can see how price returned to mitigate that, and now another bullish continuation. So before price gave this bullish continuation, we have this consolidated price delivery before price broke through that. So price finally broke out from that consolidated delivery. So if we are bullish, it means that we want to see price to continue trading above this consolidated price delivery. So you want to see how price may trade higher to this zone. This will be your first target, the bearish order block here, and then price may give a reaction to continue bullish to the upside. But then if price wants to give us a bearish movement, then we could see price falls to the downside, and then we have our bearishness to the downside, just the way I pointed out to you guys from the daily time frame. So from the daily time frame, we had a clear perspective of where we might see a change in state of delivery. Let's check that daily time frame. So you can see that in the daily time frame, I told us if this block gets violated to the downside, then we want to see how price will trade more lower into this bullish fair value gap. So from the 4-hour time frame, it clearly means that if we have bearishness to the downside and price begins to take out these low points, then you want to wait for a pullback, and then we have bearish continuation to the downside into the bullish fair value gap zone. But if this sustains the bullish movement, staying above this consolidated movement that price broke through to the upside, then we want to see a bullish continuation to the upside. So this is what I have to show us, guys, in the gold pair, and this is all for the coming week. I really do not have the time to look at other pairs because I really have a tight schedule. So cheers, guys. God bless you till I come your way next week again.